Brian Schutte with Schutte Law Group. In this video, I'm going to answer the question of how does insurance work in car wreck cases. I'm going to talk about 5 different types of insurance coverage that come into play in car wreck cases. The first type of insurance is liability insurance, and that's what most people think about when they think of insurance. And it's a coverage that's on the vehicle or the person that caused the wreck, the person that's at fault. The second type of coverage, in Kentucky at least, is PIP coverage. PIP stands for Personal Injury Protection Benefits. It also goes by some other more technical names, no-fault insurance, and also basic reparation benefits. Best way to think of it is PIP coverage, and it's kind of like a health and disability insurance policy on your car that usually provides up to $10,000 of coverage. Now, the good thing about Kentucky law is it gives the person who is under that coverage the right to direct how it gets paid out. So that's one of the first things that we do in communicating with the PIP insurance company is we tell them that our client is electing to direct benefits, so you get to decide how that limited pool of money gets paid out. And it can be used to pay things like wage loss. It can be used to pay co-pays and deductibles. And then when you get to the very end of the case, if you have a health insurance company that's paid money, you can use that PIP coverage to satisfy your obligation to reimburse the health insurance out of the proceeds of the recovery. It is a really helpful tool to help minimize your losses and maximize your recovery. The third type of coverage is underinsured motorist coverage. We usually refer to that as UIM. UIM coverage should be thought of as a policy that you put on top of the liability policy to increase the amount of available coverage. So for example, if the person that hits you only has a $25,000 policy, but you've got a $50,000 case, if you have underinsured motorist coverage available to you, you would collect the first $25,000 from the liability carrier, and then you would look to the underinsured motorist carrier for the remaining $25,000. A fourth type of coverage is uninsured motorist coverage. And that, as the name implies, that's coverage that you rely upon when you're injured by a person who did not have coverage at all. And that is a mandatory coverage under Kentucky law. The only way that policy or that coverage won't be on your policy is if you specifically opt out of it. And the fifth type of coverage I've already referred to, and that's health insurance. And that can come from a variety of sources. It can be private health insurance that you get through your job, or it can be a health insurance policy that you purchase just as an individual. That's how I'm insured. Or you may have a government provided source of insurance. All of these come into play in a car wreck situation because each of those health insurers is entitled to be reimbursed out of the proceeds of your case, and they are actually entitled to get paid before you get paid. And so oftentimes we encounter cases where the challenge isn't getting the liability carrier to pay. It's hanging on to enough of that money so that the client gets as much as possible. And that requires thought and strategy and a great deal of attention to the timing of how the case gets resolved and sort of the aftermath of all of that. At SLG, our real expertise when it comes to the personal injury cases, at least as it relates to insurance, is the ability to coordinate all of the various coverages so that we minimize the amount of loss that you have and we maximize the amount of recovery. If you'd like to learn more about this, go to our website at slg.legal and look at the Client Resources section. Or if you have a case that you would like for us to look at, feel free to schedule a free consultation. We don't charge anything for looking at a case, and on personal injury cases, when we do accept those cases, the fee arrangement is always a percentage of the recovery. So you never take money out of your hand and put it into ours. The only way that we get paid is when money is on its way to you, typically from an insurance company. And if something goes south on the case, unexpected, and we've spent money, got expense money to develop the case, and we don't end up making a recovery, you don't have to pay that back to us either. So we take all of that risk, and that makes us very diligent to choose cases that will, that are good, legitimate cases, and work to make a good and fair recovery in those situations. We'd be happy to meet with you and talk with you about your potential case. Just give us a call.